Investors and traders, welcome to the channel Market Chart Pattern. Today is 20th of May 2025. Hope everyone is having a good day. So we'll take a look at the key US technology stocks for this video segment. As always, the video is for educational purposes only and is not a financial advice. So we'll start by taking a look at the QQQ, which is the Invesco Trust for the technology. It follows the NQs quite well. Which is the NASDAQ 100, or the NDX, which is the NASDAQ 100 cash index. So I'm not going to go into the details of the pattern formations, but we have had a very nice one-to-one price projection ABCD. You can watch the video done over the weekend, and you can take a look at that same pattern formation which exists in the NDX cash and also in the NQ futures. So what the market has done is it has recovered more than 78.6% retracement. This is the maximum kind of retracement that we like to take a look at. However, there are people who also at times take a look at 88.6, which is something very rare that I take a look at, but here you can see it is hitting that level. So the possibility is some sort of a retracement can take place, and we are seeing after a really strong rally on Monday, even after the bad news of downgrade of the US credit, the price action was positive. So it was bad news, good action, direct market feedback. However, we are seeing some consolidation right here. The chances are between this 78.6% and 88.6% is going to actually be in our trading range. However, my bias is to the upside, and the reasons I explained are actually in this weekend's video. All right, so now let's take a look at some of the individual names. So we'll start by taking a look at the Meta. This is the daily chart of Meta. It did a really nice one-to-one price projection ABCD, then a double bottom right here. It didn't hit these level exactly, but we had some key retracements coming in, so it was a confluence level, it was close enough. And then we have seen a really nice rally, and it's just right between the 61.8% and 78.6% retracement. What I think is it's got a chance to hit that $675 per share level, and that's where we have. This is our target, but it could be a pretty strong resistance level as well, because the confluence of two ratios coming together, 1.272 expansion of the CD leg, and then the 78.6% retracement of this entire swing lower. So we'll be paying key attention to this 675 level. This is the weekly chart of Meta, and what we can see is it's right into this box that we are drawn for possible resistance. The green, the dark shaded green represented basically higher resistance level. So a move from here, if the resistance were to be encountered, a sharp move lower was expected. With this much retracement, it has actually, in my opinion, weakened the chances of a bigger pullback. Because it has retraced so much of this downswing. And on the upside, I think the targets remain around $800 and even $900 per share level, because that is going to be the 1.272 and 1.618 expansion of this swing respectively. So this is what we are watching in Meta. Now let's take a look at the Tesla stock. Right, here we go. So the Tesla, as long as this level is held, which is 7th of April low, I think we are in this one-to-one price projection higher. So $525 is something which the Tesla stock could target. And you can see that although it's a pretty volatile stock, it has retraced. This retracement was 56%. Now, before we get into the details of it, I just want to show to the new subscribers that this is the chart which we had done a year in advance, where we're forecasting the stock would hit $500 per share level, and it went as high as $484.54, which is close enough. Just missed it by $12 or so on a nearly $500 stock. And after that, completing this pattern of big ABCD in brown, it had about a 56% retracement, but it's not the only time that this stock has had. It's got a pretty volatile personality. Maybe it's got something to do with the founder. I have no idea, but it moves around quite a lot. It jumps and then it pretty much retraces up to 50%. So this one was this swing here. It was another nearly 55%. This is 56%, nearly 55%, and this is the largest one. We have seen 76%, and right here we were forecasting moving into 2023 right here to watch this 78.6% retracement. We're actually calling a bottom, and the videos are in the archive just because of this pattern formation right here in the shaded region. Now let's move down to the daily chart here. And here we go. This is a very strong support level. Look, the market was just not able to get below that, and then we saw if we were to just draw a simple trend line like this, there was like a breakout, and there was a chance the breakout could fail because of the structure right here, but it went higher, and now it's up to 50%. I'm thinking it could get to the 383 level, which is 61.8% retracement. We had a number of these ABCDs completing in this zone, but what I missed in my analysis was there was a gap here, right here, and then I was quite surprised this day of 10th of March when the market actually moved lower. But then when I looked closer, it was basically a closure of the gap. So the 100% of this gap was closed. And then what we saw was just a fair amount of consolidation in this region. And then we are seeing a nice rally in the Tesla stock. Okay, now let's take a look at NVIDIA. Okay, so the NVIDIA stock is making quite a lot of news recently because of they had done a event like similar to the developers event done by Apple for NVIDIA, where they unveiled what is NVIDIA doing with artificial intelligence for physical, so robotics, having AI factories, and how their chips are going to actually help achieve all of that. So it was really really interesting presentation if you get a chance to watch that. So but on the technical level, we'll just watch and see what is NVIDIA telling us. And what we can see is NVIDIA has retraced quite a lot of its decline, but it hasn't made new all-time highs, and it's right in this zone where there is resistance present between the 78.6% retracement and this ladle line. This I like to call it the ladle line. This is giving it some trouble right here, so it could be higher level consolidation, but the chances are we could get some sort of a pullback. And of course the stock has moved in gaps right here, so I'm going to remove this one. So it's got a chance it can pull back, maybe come down a little bit and test the 20-day moving average. Now if we now on the good side is that these were the bearish symmetries which were present. This was the maximum rallies we had seen before a pullback happened. The market has broken the bearish symmetry, so that's a pretty good news for the stock of NVIDIA. And here we go. This is the weekly chart. This was our key pattern that we were watching towards the end of 2024 and also beginning of 2025, and the market has just not been able to move up beyond that level. So what the market has done is it has moved and tested the bottom part of this range. So essentially all of this is a pretty big trading range behavior. It could be seen in two ways in my opinion. Maybe this is distribution, but it also could be a higher basing pattern formation where the market is in a sort of a pause, building maybe new accumulation and break out of it. So we'll find out quite soon which way it's going to go, but we do have a slightly higher target, which is around 170. That wasn't filled, but look how many months it's been over 6 months, half a year. The market has just not gone anywhere. So either we will be starting a new leg in the NVIDIA stock quite soon, or this might have been part of some distribution, and the stock could actually be forming a head and shoulder formation, and it could move lower if it especially breaks this 75 level, which is kind of the neck. Then we can see the stock pull back quite a bit, 200-week moving average right here, maybe even lower. So we're going to find out quite soon, but the investors do like this stock quite a lot, and of course they are at the forefront of artificial intelligence. So while we are taking a look at the NVIDIA, let's take a look at the number 2 competitor, which is the AMD. So they have clearly missed on the artificial intelligence side of things, but their chips are really favorite, or they were at one point really favorite with the gamers. And the CEO of AMD, she's a very capable CEO, and she has turned around the company before as well. So I'm sure they are not just sitting idle. They are working on how to compete with NVIDIA. Their chips might not be as fast as NVIDIA chips, but it also, after the DeepSeek release, some people are actually questioning, do we really need those fast chips? Do we really need to be programming at low level at CUDA, which is the really low level language used for programming for these big large language models? So those sort of things. So I think it's likely to play a catch up, and we are beginning to see some of that appear in the price action. These are our patterns that we have been watching in this level. There's a great deal of support right here, and what we have seen, look at the number of weeks, 1 2 3 4 5 6. It's been a month and a half, and of course this week hasn't closed yet. The market is just in this region, respecting the support level. So this is really important. Also, the market closed above the 20-week moving average, so the momentum is slightly getting better, but it needs to get better more. And then if we just move to the daily chart, here we go. So on the daily chart, one of the things is, I just want to mention that AMD also on their call when the earnings happened mentioned they'll be buying $6 billion of their stock back. So there's gonna be a massive buyback of their stock, and if there are a lot of shorts built into it, I think they'll begin to cover. And this is perhaps something what we might have been seeing right here, because the stock has been moving in gaps. Now the key for us is really, this was the bearish symmetry right here in this leg, and that has been broken clearly. And the biggest of all these rallies have been, if we just take this combined one, this much. So if the market is able to get above this level, that's going to be a very positive sign. And of course the price is closing above the 20-day moving average, but it could still go back and kind of reach this level again. And if we were to look at it in a slightly different way, and let's take a look at this like this, if we just break it down in these segments. So here A, B, C, D. So this is basically the harmonics in this entire leg lower, because this much is the magnitude, and it's being repeated right here. And if we just bring it right here, then what we are looking at is exactly the same thing, that the market rallied by this much and now it's pulling back. So that will again be a really good sign if we are able to get above $130 per share level, that perhaps all of this bearish symmetry in this leg lower that has been negated. And what we are beginning to see is, at that point, would be a sort of a beginning of a inverse head and shoulder pattern, but it will more likely be at a motive wave higher in the AMD stock. Okay, now let's take a look at Tesla. We are taking a look at Apple. All right, so Apple is stuck in our trading range. I think Apple stock, or the Apple investors, got a bit of a relief because of the trade war negotiations going on between China and the United States, where there has been a pause for 60 days or 90 days, something like that. So that's going to give Apple a chance to, because the supply chain is so much reliant on China to bring a lot of stock in the US. And they're very clever people. I think they're going to figure out something. Tim Cook, very clever person, right? master of supply chain, so he's going to figure out something. And we are beginning to see some of that being reflected in the stock when it made this big ABCD right here. Pretty strong support level being held for over a month now, but it's getting into this region where it's just going nowhere. It's just going nowhere. There is a slight chance that we might be in this blue ABCD higher. We could see at least $225 per share level. This is where I've also drawn the box. So let's see what sort of price action we get from Apple. But Apple seems to be stuck in this region. Really key support levels came on the 7th of April. As long as that low is held, I think it's got a chance to move higher. Getting below that, I think that's going to be very difficult for the stock. It could move back to 120. Okay, so now let's take a look at Roblox. Here we go. So Roblox is just following our pattern formation really well. After our first target of $65 to dollar was met, 63 to 65, it had a bit of a retrace, and I'll show you the kind of pattern we were anticipating on the daily chart. It kind of formed exactly the same pattern. So I would like to think that 95 to 100 bucks is basically on the cards for Roblox. And then if we take a look at this on the daily chart, here we go. This is what I had drawn in orange line, that perhaps if the market is able to do this kind of a correction, then it will start a leg higher, and this is exactly what we got. But I had no idea what the stock will do. What I was trying to point out was that maybe we could get just an ABCD correction and a move higher, or it could be a little bit complex correction, so we could have an ABCD, then a corrective move higher, and then a leg lower, maybe around here a little bit lower, and then move higher. And this is how it panned out. So it's indicating strong momentum to the upside. So about 100 bucks, 95 is where Roblox would go actually. Now let's take a look at the Amazon stock. Here we go. Here we go. Yeah, so Amazon, it's also one of those stocks which is kind of also hit by a situation with tariffs, because they have on the retail side a lot of third-party sellers, and even their own inventory they buy coming from China, so margins could be squeezed, or the prices might go up on the platform, which would indicate perhaps less sales. But that's also true for many of the other retailers such as Walmart. And on the technology side of things, their AWS, there's quite a lot of competition now coming from Microsoft in particular, and Google, and of course there are always smaller operators who are trying to get more share of the market. So it's become a pretty competitive place as well. So putting the squeeze on the margins. So I think it's just consolidating between 61.8% 50% retracement. Also, if we just take a look at the Shopify, which is also in e-commerce, we can see that it's just also consolidating between right here. But on the weekly chart, we are watching it as it has held this trend line quite nicely. It's got a chance to maybe make a new all-time, not all new all-time high, but I mean take this high out. And I think the easiest way to take a look at this is just by having a expansion level. Here we go. So 145 to 165, near about these new all-time highs, maybe even a stab at it. It could happen for Shopify, as long as trend line is not broken. Okay, now let's take a look at a Zscaler. Okay, so I think Zscaler is there, the kind of level we were watching. I will show that on the daily chart. So I think it's moving the CD leg higher. It's gonna be a key test coming up quite soon, around 260, which is the structural high. Beyond that, I think we are looking at maybe 320, 285, 320 on Zscaler. So it's a pretty volatile stock. Zscaler, here we go. On the you can see this really fair amount of really long consolidation. Is kind of like off a spring, coiling and release of energy, and boom, it's going for these highs by the looks of it. I think there is one more CrowdStrike. Let's take a look at this. Let's go to the weekly chart on CrowdStrike. Here we go. A subscriber asked me to take a look at this, so I've done a detailed analysis in another video. It looks like moving in this channel formation. It's consolidating right here for a few weeks now, and you can see that it was a negative week, then an inside bar, and this week thus far has been an inside bar. Now the key is the 7th of April low. As long as that is held, I think we are in this ABCD one-to-one price projection, so favoring 500 and 550 also will have like this upper channel line. It's not really a channel, it is more of a wedge formation because it's converging. So this is what I would like to think that it is in this, and then we can have this ABCD right like this, and there we go. So it also is kind of pointing to $500, and maybe we are able to get 550 as well if the momentum is strong. But the 7th of April lows are the key for this stock. There's a great amount of support around that region, between $315 and $300 per share level. As long as that is held, I think it's got a chance. It is one possibility. Top of the range, so it might come back, test somewhere in the bottom part of the range. That retracement remains a possibility, just because it's just consolidating in this region and just been a few weeks and it's just not been able to break out. That possibility is there, but the key is the 7th of April lows. As long as they are held, I think we are in this red ABCD to the upside. So this is what we are watching in the key technology stocks. Thank you very much for watching the video. I'm gonna put a link of my Substack. The subscription is free. The reason I'm putting that is I am posting there on pretty much daily basis, and I'm posting some of the things which I'm not able to cover in the videos because of the duration. So it will include things like stocks which are making 52-week highs. It will include stocks which are generating alpha by beating the S&P 500 on daily, weekly, month to date, and year to date basis. So you'll get a lot of information by actually reviewing those free posts that will come your way daily or on weekly basis if you subscribe. So I will actually highly recommend you do that. And I think that will be fantastic. You'll not miss on not a lot of things that I will not be able to cover here on the YouTube channel. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.